Hi everyone, good morning and welcome to the market right here on ET Now with me Avanne, Dubash, Anisha, Jain and Ajaya Sharma, AAA, I just realized. And you know, you've got a pretty strong momentum that built up in trade yesterday as we're marking the end of the series. How the year has flown by, but I don't think there's any complaints whatsoever, especially looking at the setup right now. By the way, you've got the Dow at life highs, you've got our markets which saw that last moment surge, and guess what? You've got the frontline indices which has seen their biggest gain in the last 3 years. At least that's how the December series has panned out. And even for the Nifty Bank Index, it's been the biggest gain in the last 14 series, despite the fact that it has been a bit of a slow mover. So 21,500, Ajay, and we've broken past that.
In fact, the last hour of surge yesterday, I was just, observing the screen. We were finding it difficult, 21,500. In fact, all the domestic traders you speak to were saying, Jan mein dekhenge, when this new series start, market is not going away in a hurry. But it doesn't seem to be the case. Yesterday, that hurdle of 21,500 got taken out in a gush of liquidity coming in from the FIs. Even 48,200. We closed at near 48,300.
And we've been facing resistance on that for quite some time.
For quite some time. So yeah, and one more thing. The other day, everybody was talking about who says FIs are not working from their vacations, right?
I was about to say 2,900 crore worth of inflow. What is that? Holidays that we are talking about.
If that is holidays, then when they come back in January, then what will happen?
Yeah.
I was talking to some asset allocators, and they say they were, so this is the we are sitting already on a very good series, right? The best series you said in how many series?
Almost 3 years for Nifty.
3 years.
Yeah.
Almost 38 series, right?
Yeah.
So we are already having a lot of gains under our belt. But the setup for Jan series is not bad either. FIs have just started trickling in last 15-20 days. It's not that FIs are coming back for you. And in the last 2-3 days, the setup for FIs has improved, like dollar index cracking, like yields cracking. That has just happened.
But
if
going by the historical returns in the month of Jan, it's not been great.
Yeah.
Just saying.
Only
no, of course.
4 out of 5 times it's been negative.
After this kind of a momentum,
yeah.
But will it break this? The seasonality factor be different because FIs have not been there. I mean,
because this time around there's no trigger. Also, every time we talk about budget and everything, this time there's no expectation per se from the budget. It's just going to be a customary thing as well.
So okay, fine. So I'll give you one more data. This series, which is the best in 3 years, 2/3 of the movement in this series actually came on 2 factors which coincided. The 3 elections win by BJP was not in the price. The big move came, surprise element, and even Fed turning dovish in the meeting, the recent meeting, was not in the price, right? So it happened, but the impact of it has not come fully in flows yet. It may be part of 15-20 days of Jan. Perhaps this momentum may continue, and then obviously people may that seasonality factor may trickle in. Who knows?
But very interesting setup that we have at our hand, and definitely what is also doing well is the support that we are getting from global cues. So that party across the globe is also continuing, as we were just flagging out. The US indices are sitting at record high levels, or very close to that. Our dollar index is more comfortable because it slipped below the 101 mark as well. Almost a 5-month low that we are staring at for the dollar index. The 10-year yields have fallen 10 basis points on an intraday basis yesterday to 3.79%, and gold was the other factor from 2070 thereabouts. Yesterday, gold actually suddenly spiked to 2093 thereabouts. So that's something to watch out for. So a lot of action across the globe as well. And this morning, you have the GIFT Nifty suggesting that we are likely to open in the green. So that's as well something to watch out for. But apart from the global cues, Ajay, I wanted to talk about the pharma sector particularly. We have seen, a good comeback of sorts from the pharma sector. And as we were talking about, Street is latching to the names which have not run up. Seems like pharma is one of those candidates.
Before I talk about pharma, there one data point I want to tell about global cues. You were talking about how DXY cracked and massive fall in yield. The rally which we are seeing in US market is a very broad-based rally.
Yeah, it's no longer just those
tech names. It is the best
on Nasdaq.
2-month gain Russell 2000 seen ever. So now the global rally is just not on the benchmarks; it is getting broadened. So it may have some more legs in January.
And actually, in India, it's the other way around. It's not just the broader market. Now the large caps are participating, because last 1 hour it was only that large cap participation that really took that index to 21,600 and beyond.
Correct. Yes, that's correct. I mean, look at the large cap; they were flying. HDFC is back at 1,700, upwards of that. Kotak is at 1,900 back.
Correct.
So and cement majors, pharma. Yes, you're right about it. But let's come to pharma. Yesterday we saw a very big upgrade coming in on Lupin, by the way, by one of the brokerages. But my point is that pharma overall is seeing very good. Apart from, there are some 44 mutual funds in India. Not more than 4 are overweight on pharma or have started, going back to pharma in the same way it used to be 5 years back. So the street is still, kind of coming to terms that probably worst is over in pharma. And you saw Dr. Reddy's and Lupin both raise their guidance and commentary and stance in the last 2 quarters. So today's Lupin's upgrade by a brokerage is actually not very surprising, but the direction seemed to be by Spark actually in that. And not only large cap, Loris is back to a 52-week high. Piramal Pharma has almost doubled in the last 6 months. So there's a broad-based allocation happening in pharma. But of course, today the large cap on the back of that upgrade may move. The Lupin and DRLs of the world, actually keep an eye out there because many of their business models are relatively similar. So when Lupin upgrade comes in, the rub-off might happen on some other similar business model, large cap pharma as well.
Oh, yes, indeed. That was an interesting note coming out. They've upgraded the stock to a buy from an add rating. They've upped the target as well quite significantly to about 1440, saying that the margin levers are only going to play out. So the long-term view on Lupin as well seems to be strong. And they've upped their EPS estimates for FY26, by the way, to about 10%. But that aside, just yes, taking a look at the kind of participation we witnessed yesterday, it was large caps all the way that did manage to lead the rally, and that led to a solid fresh high on the frontline index. We're set for the biggest series gain, as we said, in the last 3 years, and it was bolstered by the likes of a Hindalco, Ultratech Cement. A lot of those auto names really pulled their weight yesterday, and IT too participated with heavyweights from the banking space. So, Ajay, we're talking about broad-based rally, we're talking about large cap participation, and it seems to be across the board because literally a handful of stocks in the red yesterday.
In fact, metals out of all of that, the kind of stock which you named was something which will be on my radar today as well. Added boost from dollar index. And one more thing I'll just like to tell our viewers that out of all the metals, the best shape is actually aluminum is in best shape because it has got industrial use, and we are seeing massive capex happening not only in India, abroad as well. So you have balance sheets of Indian aluminum based companies like Nalco, NMDC, Hindalco is in amazing shape. So it's just not a commodity play, it is a play on underlying commodity, have very good industrial use, plus of course dollar index and all of that, and balance sheets have improved a whole lot. So keep an eye out of all the metal pack, aluminum in particular, which is Hindalco, Nalco and NMDC.
Okay, we'll talk about the metal space with Naresh as well. But before that, at the index level itself, Naresh, what do you make of that stellar rally that we had at our hand in the last hour yesterday? And more importantly, what does this spell for the expiry today? Because one was seeing that 3 p.m. move yesterday, actually.
So we saw a good spike yesterday. And overall, the spike took it to new all-time highs. So a classical flag breakout here on both the Nifty as well as on the Bank Nifty. So that's a good confirmation of the trend. So in this case, the last range is say roughly 400 to 600 points. So that opens up an upside of 400 to 600 points on the Nifty. So we go towards 22,000, 22,200 as the possibility. Similarly, on the Bank Nifty, we go towards 49,200 to 49,500. So that's the possible upside after the breakout. Overall, yesterday, we did not see a similar uptick come in the mid cap and the small cap indices. So was more focused via participation by institutions more on the heavyweight side. So overall, the structure is positive, the bias is positive. And as usual, the best way to ride this trend has been to continue to trail onto positions. And now your trailing stop loss shifts closer to 21,300, 400 levels.
Right, let's get in Naresh's top recommendations going as well. And Naresh, what are you picking out? Is it going to be from the large caps given the gusto that we've seen here?
So continue to focus on large caps as such. So first is a buy on ONGC. This is a structural breakout, which I continue to like. The stock saw a little bit of a dip, but the recent breakout is a multi-year breakout, 2015 to 2019. The stock had topped out around 200 odd levels, as well as it was a top around 119, 2021-22. So a structural breakout here should continue to outperform going forward. Stop loss at 200, target price of 240. Second is a buy on State Bank of India. After giving that breakout above the 620, 630 mark, the stock retested those levels and is now making a flag formation which has a breakout above the 655, 660 mark. I would expect it to eventually break that and head up higher towards 690 plus. Stop loss to be kept at 635.
Yeah, point taken. So those are the top stocks which are on the radar of our technical experts, but which are the stocks which are going to be in news as well. Samit is joining us in the studio to talk to us about cement as well as CESC. What should we start with? CESC, it's up 30% already in this month, and there are more legs to the rally if you go by what Antique is saying.
Well, not only Antic, what I was seeing through the Bloomberg screeners page is that only two analysts have a target price currently which is higher than what the current market price is, but all of them have a buy rating. So there could be many more brokerages coming in with an upgrade when it comes to CSE. Now what Antic here is saying that is that the company is going through some radical changes. The first one is that they have set up a new subsidiary where they will house the renewable asset and they're looking at around 3 gigawatt of asset which will be commissioned over the next 3 to 4 years, and this asset could add around 1800 crore rupees to the company's EBITDA. Now apart from this, that Chandrapur a 600 megawatt project currently has two power purchase agreement. One is a long term for 300 megawatt and the second one is a 230 megawatt medium term agreement with Indian Railways, which they are expecting it to be revised by the end of this financial year, that is FY24, and 70 megawatt is based on spot rates. Now given the fact that the spot rates on the higher side, this could also add around 600 crore rupees to the annual EBITDA of the company from FY25, FY26. That's what the brokerage is expecting. Apart from this, they're also saying that the regulatory asset liquidation is also underway, and till FY26 at least, they're expecting the Kolkata operations will be driving the show, and they're expecting a EBITDA CAGR of around 26% from CSE. And one key highlight that could lead to a re-rating when it comes to CSE is the tariff hike that is much expected from the West Bengal Regulatory Board, which would also improve the cash collection for our company going forward. So these are the most majorly the key reasons behind which Antique has actually upgraded or hiked its target price to around 150 from earlier target price of 193 rupees.
Soumit, this is happening after this massive CSC day which they had conducted, right?
Exactly.
All
After that, there are two. First, it was BNK which came out with a target price of 170, and now Antique has come out with a target price of 150, and many more could come given the fact
but
that.
But out of all the companies showcased, I think this one is seeing maximum amount of institutional interest. Is it?
Yes, at this moment, yes, a lot of institutional buyers from when we speak to many brokers in the market, there's a lot of interest among institutional buyers. It's just time to come for them to buy.
Yeah, I mean, compared to many other power stocks, this one has not actually done a whole lot as well.
Well, yes, when it comes to power generation companies, the run-up is not that as much as what we have seen.
It's a smaller market cap as well. Nuresh, can you do a chart check for us, CSC? Pull up the last 1 year chart and tell us what is the likelihood of it going higher from here on? What levels to watch?
So CSC was one of my recommendations around that 1995 mark where it broke out. And after that, the stock has already made a sharp move. So at current levels, the risk reward is not great. So one would be better off waiting for a dip or a consolidation here. In this case, the trend is still up, but I would expect some bit of a consolidation. The stock went up 30-40% really fast. So in this case, and given that it's a power stock, we've seen the sector do well across the board. And a lot of these names moved up together. So we had a Tata Power move up in the same period of time, and everything is now getting into a consolidation. The medium to longer term trend is still positive, but I would expect some pause here.
All right, that's CESC for you. Tremendous move that we've seen. Let's move right on then and talk about cement, because that is one sector that's hogged the limelight off late. And when I say off late, I mean particularly yesterday, at all-time highs for an Ultratech, very close to all-time highs for the rest of the basket. What are the cement channel checks suggesting? And there have been positive brokerage notes too.
Well, yesterday there was this Nomura report which had upgraded the entire cement space, and today there is this channel check which has come in from Centrum, which is actually saying that in the month of December, again the prices have declined on an all India basis. If you see, the prices have come down by around 2% on a month-on-month basis. Now do remember there was a big price hike that was taken in the month of October, but post that we have been continuously seeing a price decline. However, for the third quarter as such, if you see, the prices are still higher on a sequential basis. As compared to Q2, it is higher by around 2.5%. So there could be some earnings positive momentum coming in for the cement companies in the third quarter of FY24. Now northern region is what the dealers are suggesting is the biggest decline in prices that has come in around 3.8% on a month-on-month basis. There's a decline, and this is largely because of the construction ban, winter offset, and because of election that we had seen in Rajasthan. And on the contrary, southern region has seen the least decline of just 0.9%. But pan-India basis, what dealers are suggesting is that demand has been sluggish. So this is one of the concerns that could in fact be on the negative side or could weigh on the rally that we have been seeing on the cement companies, and that is demand. Because what cement companies were expecting was a double-digit growth in demand coming in for cement in FY24, but continuously what we are hearing is that demand offtake has been on the lower side, and H2 is expected to be better for cement companies. So if demand doesn't pick up now for cement companies, then growth could be on the lower side for the cement companies going forward. So that is one concern that could weigh on cement companies going forward.
Actually, we did speak with the Centrum analyst Mangesh yesterday on closing, and he was talking about that he's overall a bit neutral on the sector just because of the demand concerns that you pointed out. But Ultratech and Birla Corp were a couple of names that he was quite positive. In fact, we do have, I think, that slice
bordering
of the
caution actually. Neutral. He was sounding neutral, bordering caution. That's why I am surprised that this kind of a rally is actually happening, because on ground things are not so hunky dory. So we were like, wow, really? So you're saying stick to quality names,
yes,
but don't go all across, whole hog in cement, because things on ground are not very
yeah,
good.
so it's a bit of a mixed bag. Again, it's glass half full, glass half empty, but the stocks for now are reacting quite positively to what we were seeing in the market yesterday. But the other one also that I want to discuss further, guys, is that Cello, a meeting that happened as well. Because there was quite a bit of positive action and positive notes coming in on account of that as well. They're talking about how glassware is expected to drive the growth going forward. It's expanded its capacity as well. The utilizations is expected to grow. And this is something that you've been tracking very closely, right, Ajay? They're saying that the capex is expected at 40 to 50 crore per year for the next 2 to 3 years.
The part of their business which really catches my attention is their margin profile. I mean, if you look at their margin profile, still saying comfortably hold the 22 to 25% kind of a margin profile. And yes, I mean this is a blended margin which you're talking about, but a reasonable size of their business actually comes from relatively low value. They have intelligently made the business mix now towards high margin as well. But commanding this kind of a value margins is actually something commendable. And now management has met a lot of street guys as well, analysts, and have given a whole host of guidance going forward. I will definitely have this stock on radar. Also because a similar company, Flair, also got listed recently. So Cello and Flair, similar kind of business model. But Flair is not seeing follow-up buying. Cello is witnessing follow-up buying. So there must be something superior about the business model. So margin is something which I really like. I mean, I keep telling you jokingly that there is one section of their business which is very low value. Still, they are commanding such high margin. Must be something to it.
Yeah, 23 to 25% margins, and they are saying that sales are expected to grow 18 to 20% for the next 3 years.
So 20% base growth on the revenue, and then 20 to 25 margin. What a great place to be in.
Yeah, scaling up their new businesses also. So clearly lots in store when it comes to Cello. But tell you what, ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day. This is a groundbreaking campaign, and we want to help you, the viewer, build your personal finance portfolio through regular and disciplined investing. Nivesh Day will be celebrated on the 5th of every month. So join ET Now and ET Now Swadesh along with Sundaram Mutual to learn how you can build your financial future with an SIP in mutual funds.
Welcome back. Well, let's take stock of how today is likely to pan out, or at least what the expectations are, because if you go by what happened yesterday, there was a 200-point rally, and the GIFT Nifty is fairly excited today as well ahead of expiry. But Kunal, what's your view? Getting a bit skeptical with the ferocity of the move, or this is something which is actually giving you more confidence?
Well, absolutely, giving more confidence. Not a reason to be a bit skeptic even at current levels. I think what's actually happened yesterday was a very strong round of short covering on in terms of the writing of call options. So that was one of the phenomena which we saw yesterday, both on the Nifty as well as on the Bank Nifty, when we scaled past specifically about the 21,500 mark after that intraday dip on the indices. So I think that was one of the major reasons why we saw the index movement a bit more stronger in the second half. I also strongly believe that we generally move into those round figure strikes on a very staggered basis. So, earlier we took a pause at 21,000 mark, then at 21,500. I think over the last 4 or 5 days, we've managing to, go through a bit of consolidation. So, which means that the next target for the index should be at the 22K mark for the Nifty, and 48,500 to 49,000 on the Bank Nifty.
Okay, fair enough. Let's get in your top trading calls as well, Kunal.
So I'll go with PSU banking stocks, majorly. So 2 buy calls over there. First one is about Canara Bank, expecting the stock to get into a breakout. Slight underperformance over the last 4 or 5 days, but I sense that the stock should cover up the underperformance with momentum coming back. Targets of 460, stop loss at 419. And PNB is the other stock which yesterday gave a price volume breakout above 90 plus levels. So would suggest a buy with a target of 98, stop loss to be kept at 87.
Nuresh, I'd like to come to you on that point once again, which Avanne was alluding to. Yes, we've had a great series. In fact, the best we've seen in 3.5 years or thereabout. How much probability would you assign that the Jain seasonality factor, which shows a profit taking may set in, may not happen this time around because of the setup, global setup, FII flows likely to increase, all of that? Or would you tilt towards the seasonality in Jain series?
The question is how much do we go up in that seasonality move? So if we look at every time when the markets have bottomed over the years, and January has been a tough one, we've actually started off really well in that first 5-7 days. So the point here is, if we go to 22,500 and you take a pause and we come back to 21,500, playing the seasonality does not help you, because you end up at the same place. So the view is, yes, we've seen January tops to be very important ones, whether it was 2008 or 2018, or even the peaks in 2015, Jan to March, or even 2020, we just peaked around January, February. So one of the things which I generally watch out for is whatever happens in January, do we break those highs in the coming months? That increases momentum further on the upside. So the view is we get into a January with some more momentum, and if we go towards 22,200, 500, that's the time where you want to book profits irrespective of the seasonality.
Let's bring on board Sanjeev Bhasin, then Director IIFL Securities. Sanjeev, good to have you on board. There's a bit of a debate going on in our studio at the moment as to what exactly could really play out after we've scaled these levels, after the momentum that we've witnessed. So which side of the fence are you on? I'm pretty much betting we all know.
Just to put it on table, guys, I think Nuresh got a bit confused. Jan seasonality shows downtick, a profit taking in Jan. Several years of January data was analyzed. So after such a massive series, Sanjeev, how much probability that Jan may also be a positive series, or you see some profit taking setting in leading to a negative Jan?
Good morning, Avanne. Good morning, Anisha. Good morning, Ajay. Enjoy the party, enjoy the weather. Who knows what Jan will do? One of my followers who's been very active from Chandigarh Road, we've never seen so many negative events in the span of 3.5 years. COVID, Russia, Ukraine, oil about 110, 11 rate hikes by Fed, yes, 11. Israel, Hamas, 8-9% inflation in US, EU, huge sell-off by anything that could go wrong. And yet, the market rewarded those who stayed invested. So, Ajay, the bottom line remains, you have to be owning stocks in India. If you own India, you're laughing your way to the bank. Yes, I am also in the camp that we have maybe hit a crescendo. Generally, when fools buy, you should be looking to sell or book profits. And when fools sell, you should be looking to buy aggressively. So it's the total opposite of what dichotomy is. That the biggest underperformers or the underweight people were at the FIs, and who are now turning slightly overweight. There can be a crescendo toward 22,000, but that would not be the place to be brave on your trading side. Try and book profits. Let the market ride out. We know we are headed for a standalone budget, in the sense it will be just a statement of account. But there are uncertainties. There is the election and XYZ. So always remember, leave some room, leave some paper some profit on the table for the other person to earn, and enjoy the seasonality or the best ever period we've had. And we are not making any, we are taking it lightly, but Ajay, the type of outperformance you've seen in the broader market, I think every investor who's invested has actually made money. So, kudos to the performance of the retail investor who's actually the backbone of this market.
You'll have to be really unlucky to be sitting in a loss right now, because anything and everything has run up. So there should be definitely a green on the portfolio. But yes, that caution that you pointed out is warranted, because there has been a good amount of run up that we have seen. But let's talk about individual stocks. Mr. Bhasin, one of the stocks that has seen quite a bit of run up has also been Zomato, right? There's a bit of a negative news flow around it, 401 crore, tax notice, etc. that they've got. I know this one is just one of those events, but structurally speaking, do you think the stock is now more susceptible to negative news rather than positive news, 120 thereabouts?
So, Anisha, look, these stocks, when they run up like, there is no tomorrow. And when they fall also, it's a similar thing. You saw that in the case of Paytm over one change in which the government RBI put a stricture on unsecured loan, 950 became 600 in less than 3 days. I'm not seeing the same for Zomato, because 400 crore will be disputable. It's like some of the casino companies or the gaming companies which are again disputing the excise notice and so on. I'll not get into the nitty gritty, but I think any decline in Zomato is a buy point, because in the end, Anisha, look what goes on in your daily life. Your food purchases, your everyday use of fintech on Paytm, your PB fintech, these are now going to be your daily necessities. And over a period of time, the profitability will definitely start to kick in as they mature into businesses which we know are inevitable. So I would see this be a little bit of a maybe dampener, but in a bull market, every fall will be a dip to be bought into, and particularly in these fintechs.
Sure, just let me complete that point with Naresh as well. Naresh, what's your view on Zomato? And even the other one, because Mr. Bhasin was talking about the casino players, Delta Corp is expected to get out of F&O from March onwards. What kind of reaction do we usually see on such a kind of news flow?
So first, I'll start off with Zomato. The stock has been trending well. The problem now is, if we go back to the time it got listed, it used to be in a range of 130 to 150. And there was just a 1 or 2 day spike to 160 where it topped out. So at this point, 130 to 150, I would expect a lot of resistance. And this is the zone where you want to be booking profits because the stock has already had a move of more than 100, 150% from the lows. So Zomato could get into a longer pause is the view. Now going into Delta Corp, the stock has now been finally coming out of F&O. If we go by the history, many stocks generally tend to bottom out after getting out of F&O. So out here, I would wait and watch. But overall, the trend has been terrible in the stock. We've seen very big gap downs, 20, 30%. So in such a case, you don't want to venture in such a stock. Wait it out for some more time. Let it make a strong enough base formation. Spend 6-8 months in a sideways range. So too early to call a bottom.
The same formula can apply for Indiabulls Housing as well. That one is also coming out of F&O. This series stock started moving in yesterday. Indiabulls Housing, not real estate, guys. IB Housing. What happened is Matthew Syriac, the former Blackstone India head, actually bought 25 lakh shares from the open market in yesterday's Bulgari data. Any thoughts there, Naresh? IB Housing?
So if you look at it, technically, Indiabulls Housing has been making a breakout move from that 150, 160 mark, retested those levels, and now is heading up towards 230 now. 230 has been the problem zone. This is where it topped out and started the whole fall in 2021. So technically, the structure is positive. It went through that sideways period of 6 to 12 months, wherein it just stayed between 100 to 150 with a lot of swings in that period. So technically, seems like a trend is set up on the upside. And if it sustains about 230, it could go all the way to 300 also. Given the volatility of the stock, I would keep a strict stop loss at 200 on the stock.
Point taken. Actually, I think there was that Lupin note as well that came out from Spark, wherein they've increased the target price on that one. Let's discuss that. Mr. Bhasin?
So, Anisha, I think Lupin weathered all the negatives close to that 700, 750 about 4 to 5 months back. And we had a relative outperform on that stock at that time. Now the news are turning to be positive. We know in the generic market in US, they have a huge market share. Pricing is back. In their other markets, particularly locally also, they've launched some of their new products. And relatively, I still think Lupin has the margin to make another 20% move. So as a disclosure, this is in our portfolios. We are positive on this and Sun Pharma. And we think both these stocks are the ones which will lead the pharma pack more higher. And still valuations are relatively reasonable against a Dr. Reddy or a Cipla.
Right, fair enough. What about your take on the entire cement basket, Sanjeev, just owing to the kind of synchronized move we witnessed yesterday, what channel checks are suggesting, and the fact that brokerages are giving it a thumbs up? Where does your preference lie?
So, Avanne, if you recall, Ultratech has been my top pick all the way from 6,000. As a disclosure, this is one of our top cement plays in our portfolio along with Ambuja. We still think Ultratech is headed to 12,000. Now, 12,000 seems to be a number because it's just crossed 10,000. And the speed of gains will be faster than you ever thought. But take it with a pinch of salt. Yes, cement stocks are not cheap now in the sense that they are pricing in a large part of the positives. But if you are going to see real estate, infrastructure, roads all go through the roof on spending, then cement has to be the natural catalyst which will gain. It's like saying the OMCs, because you look at the basket of when did you ever know that we are getting crude from UAE in rupee? And I think the ones who will be laughing their way on results will again be the OMCs. So Ultratech and Ambuja are two of our top picks. We have them in our portfolios and we don't intend to sell them maybe for at least this year at least.
Okay, point taken. In fact, yesterday we did speak with a cement analyst just to understand whether the market move is warranted or not, what's happening with the pricing as well as demand. Listen in to what Mangesh Bhadang of Centrum had to tell us.
Overall, if you have to look at the 3Q as a whole, so still from the second quarter level, the prices are up somewhere between 2 to 2.5% range. So QOQ, we would definitely see improvement in realization, and probably we should see softening of cost because power and fuel cost, given the low cost inventories, will start kicking in. So those should be lower. So we are looking at somewhere between 150 rupees increase in EBITDA per ton for the sector in 3Q. And the topics I mentioned is basically Ultratech and Birla Corp. And if you look at the valuations, I think the street is estimating relatively higher EBITDA per ton. So almost, I think 200 rupees higher than what they would report in 3Q over the next 2 years. Plus giving a very high multiples on the stock. So I think that's the reason why we are saying that, better time to take money off the table, because given the cyclicality of the industry and increasing competition and near-term demand slowdown because of election, probably we should see some softness in earnings.
All right, the other stock which is in focus is Marksans Pharma. From the pharma space, this one actually saw a very brutal value destruction 2-3 years back, fell to almost 30-40 bucks. Pull up the long-term chart, and since then Marksans Pharma, mostly a HNI retail kind of a stock, is trying to kind of come back and now is at 160. Nuresh, you remember the entire debacle of Marksans? It was a loved stock by PMS guys, then cracked a whole lot, and now has come back to 160 odd.
So over the last many years, the stock has seen, say, almost 80% fall, maybe 4 or 5 times, and it has gone up 8 to 10x also from those lows. It went almost into CDR 10 years back, then recovered, went up to 110, 120. Then we are back to 10, 20 levels in 2020. Then again, a superb recovery. They raised funds also, and then again we fell by 50%. So this has been the trajectory of the stock, and given that the stock has already moved up from 40 to 160, we may not be on the top of it. We have not seen a crazy move like the previous times. But technically, the trend is positive. The volumes have been stronger in this breakout about 115 levels. And mind you, 115, 120 was the top in 2015. So structurally, it's a long-term breakout. It could continue slowly and steadily. It's a buy on dips or even at a fresh breakout about 170. So the structure is strong. It has shown a lot of relative outperformance with the rest of the markets. So positive on the stock, would be looking out for a fresh breakout over 170 to trade.
All right, some other brokerage notes as well that came out, and you've got a Godrej Consumer in the spotlight. Phillip Capital has maintained a buy, saying that the company is poised for sustainable double-digit growth in FY25 and that the international business margins as well are rising quite smartly. Sanjeev, just on this entire space, wanted to get in your thoughts on Godrej Consumer and the like.
Well, yes, Godrej Consumer has been an outperformer on the back that their portfolio is doing well. Their Indonesia and allied markets are doing extremely well, where they're getting double-digit growth. And, at 650, 700, this was a really undervalued stock. I think it has now been one of the outperforming stocks. This, Colgate and Marico are three stocks which are in our portfolio, and we are extremely positive on all three. The pace of rise of Godrej has actually caught us also by surprise. From that 850, 900, it has been one of the bigger outperformers. But Colgate is another one which we are very, very positive on, and Marico is an underdog, which we think can be a huge outperformer on the back of lower input costs, which can add to their margins.
Is one stock that you like as well. But Mr. Bhasin, I just want to get a sense if you can talk about the primary market action that we have seen of late. Almost 20, 21 IPOs which were there in the month of December itself. Today, Azad Engineering is going to list. But a lot of these companies have left value on the table. Now that a lot of these have listed, perhaps now you can talk about some of those which you would still recommend as a buy.
So, Anisha, last week I told you subscribe to the SME of Electroforce, and I gave you the reasons for that at 93. They have a 8 crore profit this year, which will go to 35 crore in the next year. 16 crore, sorry, which is going to go to 35 crore. Turnover will rise to 150 crore. It is one of the best plays as far as, having a clientele of Schneider and Siemens. And in the electrical, it has a very, very niche area in prototype and the other businesses. I still think that stock, actually I recommended and it reached a circuit yesterday. I still think this stock can go to 150. The others, you have to do your leg room. Anisha, one little bit of caution. Nowadays all TV channels are showing how film stars and sports personalities are investing in startups and so on. That's on the back of the ad revenue they get. And I think that plethora is now telling me that there is a lot of fraud in some of these startups which are looking for capital. They're offering these ads through sportsmen, and every film star is now owning portfolios in startups. That is where you start to question. Stay proficient in your field. Don't get into. So I would say there is a lot of fraud building up in some of these startup plays where a lot of money gets attracted into the bonhomie of everything doing well. Do your homework. Large caps is where you should be overweight now. If you want to stay in the market, be cautious on the mid caps.
Okay. The other stock which is in focus, in fact, last few days, pharma is showing the chemical space is actually showing a very synchronized kind of buying. SRF and some other stocks is where you've been bullish. Yesterday, Aarti Industries, there was a big upgrade coming in on Aarti Industries. Today, management will also be joining us, and we broke the story with Sharad yesterday that there could be a big tie-up. Let's get a slice of that story first, and then we'll discuss it with Sanjeev. Sharad?
Well, Aarti Industries is in focus, and sources have stated to ET now that Bayer Group is likely to have tied up with Aarti Industries. Now, today already it was announced that they are having a 3,000 crore contract happening over a 9-year period for their niche product, especially in the herbicide segment. Now, earlier a contract was already cancelled with a global agrochemical player, but now we are seeing that this contract might be going through with Bayer. Now, importantly, we did send an email questionnaire, and over here the company stated to ET now that due to the confidentiality reasons, they cannot comment or share any details for the entity. Apart from this, also there is an analyst view coming in, and they have stated that the revenues will start trickling in from the current financial year, which augurs well for the FY25 when it comes to the EBITDA numbers. And
Sanjeev, a quick word on Aarti Industries. New targets now coming closer to $600. And they are doing a lot of new tie-up despite of what's happening in the industry on pricing and dumping by Chinese front.
Well, Ajay, if you recall at 460, 470, we thought that it was half the valuation of the rest of the specialty players. And for good reasons. There was underperformance. The company had cancelled a few contracts. But, it has a very good product line as far as the business goes. And some of their intermediates, I think they have almost a 50% market share in that. Now that is coming to roost, and we know that if not today, the Chinese come back, the demand for agrochemicals, which has been a laggard because of inventory and so on, will come back. I still think that 650 is a reasonable target, but everyone's targets which you hear are 20% lower. So there is a left out feeling. I think this can scale 700 rupees or maybe more. And it depends on the follow through of what the news flows are. But we continue to think SRF, Atul, Naveen are three players which you should be in. And fourth is Aarti. But Aarti, as a disclosure, was in our buy list around that 465, 475 level.
Okay, point taken. So 700 levels being expected on Aarti Industries and a whole host of other stocks you need to keep on your radar. Mr. Bhasin, on that note, we let you go. Appreciate you making time and joining us today. But let's welcome on board Hemang Jani to talk to us about what else is happening in the market. And Hemang, let's begin by talking about Five-Star Finance. DAM Capital has actually initiated coverage. They have a target price of 1,000 rupees. And since its listing, the stock has done rather well for itself. It's 700 rupees right now. They're expecting a 30% uptick. And the ROA levels are just stellar, what, 8 to 9%?
Yeah, good morning. So, see, what we've seen is that recently there is a big block deal where a prominent investor has picked up the stake. Secondly, after that regulatory nudge for some of the NBFC on the unsecured lending part, I think the business model of Five-Star business is actually much better, vis-a-vis some of the larger companies, in a space where they have a very large component of unsecured lending. So versus that, Five-Star business is better placed, and the performance, because of the lower base, because of the better processes, is much better. So I would surely have a positive view on Five-Star business, both from a short term as well as from a 12-month perspective.
All right, fair enough. Meantime, Hemang, let's also get in your take on some of the large cap stocks that really took center stage yesterday. And it was across the board that you saw a rally play out. But in particular, you had autos which saw a formidable move. How do you characterize the year gone by for autos, and what would you believe is going to be the key trend or some of the top players for the next year?
So clearly, almost now for 2.5 years, the auto sector is, doing pretty well. Though in terms of volume growth, when you look at the PV category, the volume growth is not more than 5-6%. But what is encouraging is that the two-wheeler space has seen a very remarkable turnaround in the last about 3 months. And also you're going to see a new IPO, Ola Electric, which will also have some kind of a effect on some of the incumbent players, particularly TVS. So I think overall view in two-wheeler space is quite positive. Number one pick be Bajaj Auto because of the stellar performance and attractive dividend yield also. And the second one would be Hero Motor because of slightly better valuation vis-a-vis some of the other players.
Okay, point taken. But the other space, the ancillary of the auto sector that we've been speaking about is the battery makers. Kunal, Excite and Amara Raja, if you had to pick one, which stands out versus the other?
See, I think Excite is a more stronger, medium to longer term chart. The stock has taken its time to try and cover up the underperformance. There was a point when the stock was at 300 many years back, had fallen down to more than 30-40% from those levels, and then it was more of a gradual move for the stock initially, and then picked up pace. But when you look at the charts for Amara Raja Battery, the stock has been a huge underperformer for a major period of time. It's just that off late, where you see the stock coming up into a rally mode, the volumes have picked up pace for itself. So I think it's very difficult to try and pick and choose that from a short-term angle which stock would outperform. But when you look at the last 2 years or 3 years of history, I think Excite Industries is something which looks attractive. And the stock, I think, is just nearing or has very recently given a breakout of a lifetime high for itself. So which means that there should be more traction ahead for the stock over the very near term. So I think maybe 330, 340 could be a near-term target for the stock in the next 1 to 3 months.
Hemang, what are your thoughts on Indigo at current level? It has very quietly, irrespective of what's happening in crude, come from 2200 odd to almost 3000 now, and commentary coming in that even for 2024 they are guiding that the volume outlook is pretty strong. They have a dominant share out there, barring a few complaints every now and then you see on customer service on Twitter and all of that, but largely they've maintained their dominance in that space. Do you like it even at current levels?
Absolutely, Ajay. I think Indigo has displayed a remarkable resilience even while the prices were higher. The company could actually navigate that phase pretty well. Now you are in a Goldilocks kind of a scenario where the prices have pulled off, the passenger traffic is showing a lot of traction, and more importantly, the international travel, is getting much better, and that is a relatively higher or profitable segment to operate in. So I think Indigo, though the stock has run up, it may look a bit expensive on valuations. From a positioning perspective, from an allocation perspective, surely I would go with Indigo as a high allocation.
All right, let's get a move on then. And Motilal Oswal has chosen some of their top picks for 2024, and that is Coal India, as they believe that the company is well placed to capitalize on the growth opportunity ahead. Let's find out what more they have to say on Coal India. We've got Ashesha here with that top brokerage note. Ashesha.
Well, yes, Coal India is Motilal Oswal's top bet for 2024. They've reiterated their buy stance on the stock with a target price of 430. They say robust volume growth and strong demand will aid growth for the company from here on. Coal India, they believe, is well placed to capitalize on the growth opportunity ahead. Remember, they are targeting production of about 780 MT for FY24 and 850 MT for FY25. E-auction premiums and e-auction volumes, meanwhile, will propel performance for the company is what Motilal Oswal believes. They also say that Motilal Oswal expects company to sell about 72 MT of e-auction through e-auction volumes in FY24, about 76 million tons in FY25 and 88 million tons in FY26. So company's focus on e-auction volumes is expected to intensify in the coming couple of years. Meanwhile, e-auction premiums have also rebounded. Remember, we did see that slowdown in e-auction premiums in the last couple of quarters, but now they're seeing a surge. In fact, a revival in demand and rise in international prices is why e-auction premiums have seen an upside over the last few quarters. They say companies' focus on capex is also now intensifying. Capex, which used to hover at about 6,500 to 8,500 crores in the last few years, has tripled in FY23 to about 18,600 crores. So several levers which Motilal Oswal believes will aid growth for the company from here on, and hence they've reiterated a buy stance on Coal India with the target price of 430.
Okay, point taken. Coal India is coming in as one of those bets, but just broaden that point, Hemang. So apart from, of course, the big rally that we saw in PSUs this year, what are your expectations about next year? And if you think the rally will continue, which specific pocket? Power financiers, railways, defense, these metal mining companies, and the banks?
I think as we are heading towards election in next about 5 months or so, clearly ahead of that you will see a little bit more action across the names that you have highlighted. But if one is looking to participate at current levels, I would have banks as my topmost recommendation, particularly State Bank of India and BOB. These are the two names where we think that there is a larger comfort in terms of valuations and risk reward. Apart from them, metal stocks is where we are seeing relative strength now, last about 1 month or so. So NMDC is something that we've been liking. Lower valuation, much higher volume growth, stable pricing in the domestic market. So metal would certainly feature in that list. The other pockets, whether it is the power, the railways, the defense, I think we are at probably fag end of that entire rally, and we should be looking to basically play the momentum with a proper exit plan. Because typically when the large part of the positives are priced in, you may see a little bit of a cool off. So I think I'm not too comfortable entering into those pockets at this point.
I have a question out there with you, Hemang.
Other logical way to look at the valuation of these companies would be what is the EV to EBITDA, what sort of sales profitability that they're reporting, and most importantly, Ajay, the growth and the valuations at which you are entering into it, if you are looking to enter at this point of time. So you have also seen large cap companies like Ultratech, which was up about 4% yesterday, right? So there is absolutely no such thing that because the company has a certain market cap, the possibility of additional return on alpha is less. It's all about your assessment of the earnings, even if the valuations are on the higher side. So Coal India, I think the commodity space is coming back. We've seen how the volume growth and realization picture is looking like, and is not very expensive in terms of valuation. So it's a commodity stock, so it will always have that lower valuation. But I think I would not be surprised that some of the large cap companies would surprise us in terms of performance versus some of the small cap and mid cap companies which had a great party in the last 6 months.
Your take on Amara Raja, nice 5% rally played out in yesterday's trade, and there was also JK Papers that flared up. Nuresh, that's for you. Amara Raja, JK Paper.
So Amara Raja is what I like, but Excite seems better because that's a stock which is at an all-time high and has been a relative outperformer. But JK Paper is interesting for the fact that the stock has gone through a good enough sideways consolidation. And yesterday the volumes were the highest in the last 3-4 months. A classical trendline breakout above the 410, 415 mark. Last 4 months, the stock was in a very tight range, 370 on the downside, 410 on the upside. 5-6 attempts around that area, but could not break out. Yesterday was the day it broke out, and with a good volume. So that's an indication of a start of a new trend, wherein the stock should ideally go towards 450 to 500 in the short term. So a buy at current levels, JK Paper.
Okay, point taken. But since we're talking about the cues that you need to have on your radar for today, of course, expiry is one, the listing of Azad Engineering is the other one. The third one is also the rebalancing, which is expected to take place today, and there might be a bit of a flow adjustment this time. We're expecting only a limited impact. There's not going to be a huge inflow or outflow from any of the names, but still, let's go across to my colleague Somit to figure out what exactly, or rather Sharad is joining us to talk to us about what the rebalancing could mean for individual names. Sharad?
Well, yes, the Nifty indices rejig is expected to happen on December 28, and overall minimal impact is expected. Now, as per a note by Nuvama, it's expected that when it comes to the inflows, stocks such as Bajaj Finance and Power Grid might see inflows of northwards of $30 million each, while ICICI Bank, IDFC First, also there is a range coming between $11 to $18 million. Now, when it comes to the outflows, the top outflows expected is from Adani Enterprises, L&T and Adani Ports, which is ranging between 24 to $71 million. Apart from that, in outflows expected in NTPC, TCS, Federal Bank and HDFC Bank as well. However, the amount which is there in the outflows are actually supposed to be in a minimal way. So overall, there's a minimal impact expected in the Nifty indices rejig, which is expected to happen on December 28.
Okay, so those are the expected inflows and outflows, but let's also talk about some of the individual names, the stock which have actually been consistent performers. I think Snehi will join us to talk to us about some of the stocks which have managed to consistently deliver over 20% returns year on year, because those are some of the, and there's only a handful of names, to be honest, which have done that. Snehi, tell us which are those names?
Well, absolutely. We've seen some stocks outperforming the others over the last 5 years, and let's take a look at the list of those stocks. Let's start by looking at Praveg. Now, Praveg is up 134% on an annualized basis over the last 5 years, followed by Varun Beverages at 64%, Tube Investment at 62%, and Trent at 56%. Now, what's key to note is all of these stocks have hit their record high levels very recently, all of them in the month of December itself. Praveg hit 783.5 on December 26, Varun Beverages 1380 on December 20, Tube Investment 4050 rupees a share on 11th of December, and Trent on 27 December at 3059 rupees per share. What's key to note about Praveg is that it traded at just 2.5 rupees 5 years ago, and look at those record high levels that it has reached now. And let's talk about these companies in a little detail as well. Now, let me take you through what Praveg has done. Praveg is a pioneer in non-permanent luxury accommodation, and it's recently also forayed into wedding management. Now, what are the triggers for this stock? Why has it outperformed? In 2018, it bagged a tender from Gujarat Tourism to set up a tent city near the Statue of Unity in Gujarat. Now, after that model was successful, the government floated tenders tenders in different states as well. And Pravik has secured contracts in Varanasi, Daman and Diu in 2023 for these cities as well. Moving on, let's address Varun Beverages, up 64% on an annualized basis over the last 5 years. It's the second largest bottling company of PepsiCo's beverages outside of the US. And well, the triggers are that it is expanding not only in India but also internationally. With its recent expansion, they've also addressed that they are acquiring 100% stake in the beverage company, which is a South African company. Now, the South Africa market has a potential to increase by 25%. That's what's going to aid the company going ahead as well. Its energy drink brand, which is Sting, has witnessed an exponential growth over the last 2 years as well. And another key trigger is that the company has signed an MOU with the Jharkhand government to set up a manufacturing plant in Patra 2 with a 450 crore rupee outlay as well. So that's why Varun Beverages has outperformed. Moving on, let's also talk about Tube Investments, up 62% on an annualized basis over the last 5 years. It's an Indian engineering and manufacturing company, and the triggers for this stock outperforming are that it announced its foray into the small commercial EV space via its subsidiary TI Clean Mobility in the month of July, and the engineering business is also expected to grow in double digits over the next 2 to 3 years, so it also looks promising going ahead. Lastly, let's talk about Trent. That stock is up, 56. It has given 56% gains on an annualized basis over the last 5 years as well. What's key to note is it's the 5th Tata Group company to have a market cap of more than 1 lakh crore rupees. It is the most expensively valued retail stock in the world as well. And the key triggers for this company are two of its segments, one being Zudio and the other being Star Bazaar. Now, Zudio has seen considerable expansion with more than 350 standalone stores over the last few years, and the grocery segment, which is Star Bazaar, also presents a huge opportunity to support growth. So, well, those are the triggers for Trent, and that is why all of these stocks have outperformed in the last few years.
All right, thanks very much, Snehi, for giving us some of those key triggers and interesting points there. Let's move right on, and Hemang, focusing on some interesting food trends and travel trends for the year ahead. I believe that actually airlines are undergoing some discounts as we're approaching the new year because flights aren't as packed. I don't know. I would beg to differ, I feel, when I head onto the websites to book. But just going by this trend of premiumization, the rising incomes, urbanization really picking up, how do you see a lot of these, hospitality-linked, airline-linked, travel-linked sectors and stocks performing for the year ahead, even QSR and dining plays?
So, what you said is right, that though it's not a new theme now, we've seen how these stocks have done well over the last, let's say, almost about 1.5 years. But what is very important to see is that while the stocks have run up, the visibility in terms of growth for this year is looking even stronger, more so for the hotels. Because as you see, this Ayodhya, we are going to see the inauguration in Jain, and the kind of, excitement that is going to get built around it. And apart from that, you will have people undertaking travel post this winter season, vacation, etc. So I think that theme will continue to do well. And within the hospitality, I think Lemon Tree, Indian Hotels, these are the two names that we've been liking. And I think at this price point, valuation point, also they are looking equally compelling.
Pre-open just started, but it's 9. We'll mark pre-open at 9.7 when the rates are actually settled. In line of with what the Gift Nifty was showing, it appears to be a positive opening. I'll come back and discuss. We'll take a short break on that note, Hemang and Kunal. When we come back, guys, I want to discuss small banks with you. There's a lot of action happening there. Not only price terms. J&K Bank had a massive subscription on their recent QIP. Now, South Indian Bank is also lining up. These two banks were not even considered investment grade till 2 years back. But look at how their numbers have turned back. We'll discuss all of that right after this very short break.